The idea that uncertainty has returned to the stock market in 2018 is perhaps the understatement of the year. Trade dispute, Brexit uncertainty, you have headlines coming out of NATO. What do you think is most important to investors right now?
Well, I think for investors, we kind of expected volatility in the summer period, especially with all the things that you mentioned. But I think if you look to the underlying fundamentals, the economy seems to be strong. Earnings are going to be, going to be reported in a couple of days, and they're going to be strong. So I think the fundamentals, the valuations remain strong. Obviously, trade war is going to be something that is going to be headline grabbing, and it's going to be creating more volatility. But I think even that is, is more of a negotiation tactic that while we get towards the midterm elections, I think there's going to be more negotiations and more United States and the allies, maybe Europe, NAFTA, coming into the negotiation table and actually putting some wins there to kind of settle those trade fears as well. So, I think, the economy and the valuations, which is really the underlying fundamentals for our companies, remain strong.
I know some of these ideas require patience and a longer-term perspective, especially when you talk about trade and how these headlines and new tariffs being unveiled, the impact it actually has on corporate earnings, of course, is something that we will watch this earnings season. But I'm just curious, as a portfolio manager, are you already making some allocations right now based on what you're hearing from the United States and China on this trade topic?
Sure. And yes, I think, any prudent portfolio manager or an investor is going to take these headlines and, look at the volatility and adjust their investments. So what we have done is increase our cash positions, just really taking profits in companies that we thought, are no longer meeting our fundamental requirements, and, raising some cash to put to work in better, more opportune time. You can also change asset allocation as well, maybe moving towards, some of the more safer sectors, or, moving towards difference between fixed income and equities. I think that's another way to kind of deal with asset allocation. And I think the third option is really to use option activity as well to put, some downside protection into the portfolios.
So those are good strategies. But when you're looking bigger and you're looking at all of the impacts of the policy out of Washington and what it really boils down to, is there a point where these trade disputes take away all of the benefit that was gained by corporations from the new tax reform? And how do you figure that out as an investor? Is it different sector by sector, stock by stock? And when do you know when you've hit that break-even point?
Well, I think, what you have to do is really be prepared, know what the issues are, but, and have strategies to deal with that. And I think one of the biggest, factors that you can do is, know what companies you're holding, what investments you're holding, and, really have, confidence in strong balance sheets, cash flows, earnings growth and companies that can deal with uncertainty, tariffs, trades, as these things transpire. Our central case is still not that we're going to have a trade war. So all the tax benefits are probably not going to be given away. But can some of it be given away? Yes. But at the same time, you're dealing with, a market that has good valuation, economy that's strong, consumer that's strong, that's just had tax breaks as well, jobs that are plentiful, house prices that are increasing. And I think all of those discussions need to come into your analysis as well, and not just the trade dispute. That is important, but I think it's just one part of the overall analysis that you have to look at.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.